All right, YouTube. What's up? It's your girl, RomY. Since yesterday's preview, I received some positive feedback. I'm always open and welcoming some positive feedback and constructive criticism. So leave your thoughts, leave your comments below. I realized that the comment section was disabled yesterday, but I corrected that today. I just want to go over the trades, how the trades are going, if they're going up, if they're going down, how they're working, they're flat. As we know, stocks fluctuate, so your account, your portfolio might fluctuate right along with it, right? We have some great news with these new IPOs hitting the market. And I want to discuss some of the terminology I used yesterday. I realized it may have been just a bit advanced or maybe not, but I just want to go over it and again, discuss my thought process. I'm not a financial advisor and this isn't financial advice. If you like the video, give it a thumbs up. If this is your first time here visiting the channel, welcome. I'm so happy you're here. Don't forget to hit subscribe so you can be alerted whenever I post. I've also posted a link below so you can avail yourself to some free stock. So yesterday I made reference to a Greek beta. There are many Greeks. They're referred to as the Greeks, alpha, beta, delta, theta, gamma, etc. And we'll get into that in later videos as they pertain to options more than they do to the video yesterday. So what is beta? Beta is basically a calculation, a formula that they use to calculate the inherent risk of a security, i.e. a stock, and it's measured in beta. So for instance, and there's a benchmark that it's measured against, right? And the benchmark is the S&P 500. So say for instance, the stock that I selected yesterday had a beta of 1 point something, or even 3. That would denote that it moves 3 times as much as the S&P 500. So that would be considered a highly volatile stock. Now let's talk about a safety stock. The safety stocks that I referred to yesterday that, we put our little nest egg aside for a rainy day would be something like a Microsoft because it has a less than 1 beta. Now, if you have an equity or a security or a stock that has a value of 1, it moves in parallel with the S&P 500. So it's considered a safe stock, because it's not exceeding the S&P 500. It's not lagging behind the S&P 500 per se, but it's moving in parallel. So you don't want to own a huge percentage of high beta stocks in your portfolio because it would just be too volatile. And the hits would be very volatile. Say for instance, Tesla has a beta over 2, which means it moves 2 and something times more than the S&P 500 at large. It's insane. But people actually use that to their benefit when they're trading things like options or even stocks. But again, it's very risky. It's a very volatile situation when you have high beta. Anything less than 1 obviously moves slower than the S&P 500. Negative numbers means moving in an exact opposite of the S&P 500. You don't want to be involved in that in any way unless you're shorting it or you were had puts against it. So now let's get into the fun stuff. So yesterday I purchased 5 different tickers. One was GPS, one was Team, one was Google, one was BRK.A, and one was BKR. So since then I've sold out of BKR. And why did I sell out of BKR? Well, it hit my mark. Right? If I owned more shares, I probably would have taken some off the table and let the rest ride. Because again, that was the one stock that I told you it's a complete reopening play and I wanted beta to impact that stock. And it already impacted that stock, so I took it off of the table. You, however, again, you want to moderate your risks. You want to assess it, you want to do some homework, you want to look into it, you want to see what your risk appetite is and go from there. And also use the fundamentals and charts to inform your decisions. So I wanted to go over our gains or losses for the day and we ended up in the green, 0.46%. It could have been much worse. There was sort of a sell-off today. Who knows what was driving the sell-off? Anything can move the market nowadays. Unfortunately, it may have been COVID. It could have been the lack of stimulus news, but whatever it was, we ended up on solid footing. Also, I wanted to go over some charting patterns and things of that nature with you for the trades that I initiated yesterday. So the first one I want to go over is Baker Hughes, and I took the liberty of drawing the pattern that I saw that stood out the most, which was an inverse head and shoulders. So here you can see the neckline, the two shoulders, and the head, and where it broke out. So inverse head and shoulders shows you the two troughs, and then it kind of rises again, and it troughs again, and then it's set for the breakout. And you can see where it broke out, right where the neckline is. However, there's something that's a little bit alarming for me, and that is the relative strength index, which is referred to as RSI. It's a little hot. It's scorching above 60, and we like RSI to be around 30, 40, but this is really hot. But again, it's a beta stock, and it's based off of the reopening, and I'm thinking this is why it's taking off like that, as predicted, right? The second one is AT&T, and so AT&T, I drew a channel here, and it's just an upward trajectory channel. I put in some support levels where I feel as though if you were looking to scale into AT&T, you should take advantage of these support and resistance lines. We need AT&T to break 31.34. I'm not sure where it ended. I'll take a look later on. Also, if you wanted to scale in, starting at 29.80, a second level of support, lower end would be 28.90, and after that, it should be smooth sailing into earnings unless they report horrible numbers, which I seriously doubt. Third ticker is GPS, which stands for the gap. And we want gap, the price target, again, $27. Right now, I'm settling for 25. I'm not coming out of the gap. You can buy at $20.95. Another area of support is $20.04, around that area, which is really a strong buy at that area. And you just sit here, waiting for that Kanye news, right? Well, the Kanye line to come out. And last but not least, I wanted to go over Google. So Google, I just drew one pattern out there. There were many in there. There was a flag out there. There was ascending triangles. There all sorts of things going on, inverse head and shoulders. But what I want you to do is take the time to learn at least one pattern and master it well, so that the minute, at a glance, you look at it, at a chart, you can say, oh, look, it's about to break out. Oh, look, there's an inverse head and shoulders. Oh, there's a head and shoulders. Oh, there's ascending triangle. Oh, there's a doji candle, or whatever the case may be. But here, I wanted to show you that there's an ascending triangle. Now, that just means that there's an upward trajectory, right? But with market sell-offs, who knows what can happen? But if this should come down, and I wanted it to drop below 1,800, I'm gonna go and invest another $25. So then I'm gonna have my full position, which is $50 worth of Google shares. And again, I told you I'm just gonna ride this wave all the way up. So that's all I have for today, folks. I hope that was enjoyable. If you like this video, give it a thumbs up. If this is your first time here, congrats, welcome. We're starting a new journey together. Look at the first video. Don't forget to hit subscribe so you can be alerted to any new videos that I post. Also, take advantage of the free stocks with the link that I provided at the bottom. And until then, if they ask you why it's so easy, tell them RomY taught me.